What is up, everybody? We're gonna go over gap jumps in this video. If you've not seen these other videos, the one about volume profiles or ranges, this is gonna be a follow-up to this series. Think of this as almost like a, well, I don't know, a free course, if you will, to better understand what it is that I'm doing. So what we're gonna look at in this video is the 3-year composite profile. I often get asked many questions. Why do you look at a 3-year profile? Does it need to be 3 years? And then also, we're going to take a look at the oldest playbook setup in the playbook. Well, not the oldest. However, the best one that's been around pretty fucking long time. It's my gap jump setup, which requires you to be able to see a 3-year profile to find these things. And then I will show you guys a trade example from today, July 20th, 23, an actual gap jump setup, and it's a full narrated video. For those of you who are interested, I do sell prep. You can go to my coffee, link in the description, join the member section, but it's not just prep anymore. What I also have are full-on trade narrations during the live trading sessions, so you can see my actual, you can see me using the things that I preach in real time, and then my thinking and stuff. And the trade we're going to watch today is going to be from that video series. Again, I'm just taking a snippet. So let's go ahead and talk about the 3-year profile. This is the 3-year profile on the right. 10-minute bar chart, by the way. This is where it resides. There's actually a gap down here. But anyways, this is the 3 years. So it is 1095 for the days. Let me show you guys what that looks like. So if you guys want to screenshot this, you're more than welcome to. It's one tick. The ticks per volume is 1, and this is Sierra charts, by the way. So go ahead and screenshot these settings if you would like. Now for the NQ, it's going to actually be a 4-to-1. Our Russell and ES are 1-to-1. So let's go down to 46 here. Oops, a little too far. So if you just want to screenshot that shit, and really, pretty much everything is standard down from this point forward. Now, here's the thing. When you have a 3-year profile, for whatever reason, it's going to look a bit different than mine. So why do I use this 3-year profile? Well, there's a trader called Verneman. If you want to see my video on him, you can go to the link in the go into the description in this course video and go to the Verneman chapter. I talk about him in there. So back in 2019, I could have sworn he was using a 3-year composite as well, so I did. And if he doesn't, well, then I do. So here we are. I've been looking at this thing since 2019. Mid 2019. And when you look at these things for that long, you start to figure out shit with it. So this is a 3-year profile. So why do I want to use a 3-year profile? Well, let's go to a daily chart right here. So this is a daily chart right here, you can see. So let's take a look at today's price action, okay? So today, and each bar, by the way, is 1 day, right? Daily chart, each bar is 1 day. So let's go ahead and come up here. So why do I use a 3-year profile? Well, it's because it's more concrete and it's not fluid. And I will continue to explain and show you exactly what that means. So since each of these are a bar, within this upper range here, we'll draw, we'll draw some lines up here. Okay, so within this range, we've had 1, 2, 3, 4-ish bars, right? Okay, and then what we want to do, okay, so what I want to do is zoom out and go to these other days. So we have 4 bars that have gone in there. So 4 trading sessions, 4 days, if you will. 5, 6. Let me really zoom in so you can really get the full monty here. So we got 5, 6, 7, 8, 9, 10, 11, 12-ish, 13, 14, 15, 16, 17, 18. And I'm just going to count everything in this red area. All right, guys. So there's been 56 different bars that have traded between these red lines. So that's 56 different trading sessions or 56 days. So what you have to understand is the volume you're seeing on this profile. And again, if you've not seen this video, you should probably go watch it, because understanding that video is going to be very paramount to understanding this video. Okay? So we have 56 sessions. So there's 56 days worth of volume on the volume profile, the 3-year volume profile, right in this section. Okay? So let's go to the 30-second here. So basically what you're seeing up here in this screen is roughly 56 days of volume, okay? And depending on where else we are on the chart, it could be many more days, because, like, for instance, down here, I mean, we overlapped this middle section a tremendous amount of time, so there's probably, who knows, maybe 100 fucking bars, 200... So 200 sessions. This is over a year on this range, by the way. So this volume in this section is like, could be upward of 100 plus, 200 plus days. Well, maybe not that much. But either way, there's a tremendous amount of volume here. So just depending on where we're at, either way, most of the volume on this 3-year profile is going to be several days. Okay? Why is that important? Well, because of the gap jump, which you're going to see, which is a great fucking trade with a lot of edge. Also, because the volume profile is more concrete, it's less subjective to fluidity. So what does that mean? So this is a 30-second chart. Let's go to the open. The open is somewhere the fuck here. I'm not going to put this profile down exactly in the right spot. However, roughly this is the open. So as we open, you can see there's a bunch of low nodes. In the profile video, I talk about low nodes and how important they are, okay? The problem with just a regular trading hour profile, is those low nodes will just quickly morph and change. The point of controls will move in a matter of minutes, maybe an hour. So therefore, you have more fluidity on this RTH profile. So let me grab the damn thing again. All right, so here it is. You know, you got clearly a high noted cluster up here. We're going to drag this profile bar by bar, which again, each bar is 30 seconds. So therefore, you're getting a 30-second snapshot in the market of what the RTH volume profile looks in that moment. So as you can see, there's a point of control up here. You got all these little low node clusters down here. And I think we're going to have a little fun and just mark out these low nodes. So there's all 3 low nodes. So there you go. Now watch as I drag this profile. Well, hell, these low nodes are no longer fucking low nodes. And we're not even 30 minutes into the damn session. So let's go ahead and delete that. That low node you thought you could lead on, well, now it's not a fucking low node anymore. This ain't really there anymore. The low node this upper low node, this upper low node is now down here, so it all just fucking moved, right? In the matter of less than 30 seconds. So press Alt-2 on Sierra charts from here to here. 30 seconds, 30 minutes, I'm sorry. Yeah, it's about an hour, maybe 30 minutes since I started drawing it. Somewhere's in that, 49 minutes, close enough. Yeah, about an hour. Okay, so as we keep dragging this fucking thing, oh boy, it just, now there's new volume down here. Well, this is low of the day. Well, what I can do is look at this fucking this 3-year profile over here, and I can look at this volume profile structure, and since this is like 59 days of volume, the difference between this and this is there might only be maybe 5,000 contracts in some of these areas versus this, which is 59 days. So there could be, I don't know, tens, if not hundreds of thousands of contracts on each of these nodes. So therefore, you know, 3,000 contracts aren't going to really move these nodes since they're comprised of so many more contracts. It takes more contracts to shift these nodes, especially since 59 fucking sessions have traded up here, right? So as we approach the low of day, I can look at the 3-year structure for potential areas like high nodes, low nodes, areas that might pivot or get the market stuck or whatever have you, okay? So let's have a little more fun. Let's put this fucking low node right in here. I said let's put this low node right in here. I said let's put this low node right in here. There we go. So let's keep dragging this. Oh, look, that low node, you know, it's being somewhat respected. However, what is interesting here is this low node on the RTH session matches the one on the 3-year. And since 59 days of worth of contracts have traded roughly up here, since these low nodes are matching, then I would have more confidence on actually leaning on the low node on the RTH session. Okay, because as we saw earlier in this example, those low nodes are moving all over the place. However, to be fair, as this RTH session drags out, it's taking more and more contracts to really change the way it looks. But let's keep going. So we continuously drag this out. So, dude, this is such a high note on the 3-year. It's such a prominent point of control. And while, yeah, it's a low note intraday, in the profile video, I talk about mid pivots. You know, I mean, for instance, this would be good context. We mid pivot this high noted area. And that's good context that I'm going to use in future trades. And what it is it's contextual cueing that I will bake into a narrative for future trades when they come back up here. So by it mid-pivoting this high node, that's a good contextual cue. Yeah, it's kind of a low node section. There's a lot of nuance with this shit. However, we're going to continue to go on. Now we have a point of control here, which isn't quite the point of control on the 3-year. It's like a low node section. So they don't really match. So let's go ahead and draw a line on that point of control right here, which is now this dotted line. So I would argue to say, hey, we need to, be careful in this general region because this is a point of control. This is starting to look like a curve. And up until this point, this is now a range. Okay, so need to be somewhat careful with that. So as it continues to go out, well, shit, as we get this aggressive chopping here, check this out. This chopping down here goes on for ages. It goes on for 1 hour and 31 minutes. And God bless the person on Discord that showed me how to use that tool. I don't remember who that was, but I fucking love you. I want to give you kisses on your head. But anyways, so what's interesting here is that low node, now it's shifted. Now the profile doesn't look as balanced because all of this ranging for 1.5 hours drastically changed the way the RTH session looks. However, this low node, now I would put more weight on, and it also is matching with the 3-year, okay? So, that up until this point, so let's drag the profile back here. You could potentially look to lean on a short right at this section because this profile looked like this and this profile looked like that. And if I had a higher picture idea of going short, hypothetically, I could do it. Did I take that trade? No. We're going to use hypotheticals. And again, you're going to see an actual fucking trade. But we need to make hypothetical situations just so you could better understand shit. And I would definitely be, depending on the scenario and the context of shit and the narrative, I would actually potentially look to leading on this low node. Okay, so just kind of keep that in mind here. So this is what it looked like at that time. Clearly, there's a distribution curve in here. There's a range. And guess what? I have a video on ranges. Maybe you should go watch it. And then you would learn how this trade would probably be a better fucking setup in conjunction with the profile video. Go take a gander, okay? So, you know, you got a distribution zone here. You can mean revert. You got high nodes here. You're leaning on a low node that matches with a 3-year and an RTH session. Remember, this 3-year profile is over 59 days worth of trading. So there's probably tens, if not hundreds of thousands of fucking contracts up in this section. Don't quote me on it. But anyways, that's my guess. So this low node is a bit more solid. And here's something else that's a bit interesting. If I draw this yellow line here, holy shit, that looks like a fucking curve. Holy shit, this RTH session is matching this 3-year fucking curve. Okay? And let me tell you something. This 3-year profile looked just the way it does, or it did before this session on this specific day even opened up. I'm telling you, this profile looked pretty because trust me, I try to trade around this fucking thing for the last few days, and this upper profile, and if you go watch my prep series, you know, link in the description, go to the coffee, sign up for the membership, you can see my preps, you'll see how this still looked the same, okay? You'll see how that still looked the same. So what we're having here, here's the great shit. This shit is amazing. I love this shit. Okay, you have price action that is rubber banding and matching during the RTH session, the 3-year profile. So leveraging this, and the 3-year profile is not fluid. It's not moving all over the place. Okay, it takes a lot of contracts to change the way this fucking thing looks. So since we're here and the RTH session is matching this curve and respecting the low node here, and the RTH session looks pretty fucking identical to the 3-year, leaning on low nodes and trading back in the means on high nodes, it's just an extra layer of confirmation. That's what we call multiple factors of support. And multiple factors of support are fucking delicious, baby. Okay, let's continue to fucking look at this. I love this shit. I love the 3-year profile. I want it to put its seed in me so I can have baby 3-year profile babies. There you go. That's how much I fucking love it. I would definitely have intercourse with something that's not a human, and that would be the 3-year profile. And goddamn, those curves are beautiful on it. Those are some nice curves. Anyways, let's continue. So that's part of why it's so good, because it's fluid. It's not as fluid unless we're at all-time highs. Listen. If we're at all-time highs, use a little logic here. There's not, 59 days of trading up there, so it's a little better further down, all right? So when we hit all-time highs, it's like, well, fuck, I can't even really look at it because it's going to look just like the RTH session. So at that point, it's like, ugh, all-time highs suck, and I'm glad we're not there. But let's continue going. So, oh, God. So let's drag that back over right there as we continue to drag this beautiful profile. And if my higher time frame analysis actually was short. All right, you know what? Let's take a look at this video from the prep series from yesterday where I tell you what I think the market's gonna do, because guess what? The market did exactly what I fucking thought it was gonna do. It fucking went down. Let me zoom out. We went fucking down. This is the prep was done up here. We go down. Now, I've been saying down a day or two before yesterday, just so you know. I don't want to like give myself an ego stroke here and be like, well, I called it to the day. No, I was really thinking that there's a lot of logic in the prep on why it should go down. Anyways, let's just take a look at the clip so you know what you're getting when you buy the membership. There's a range up here. I think we can't get across this gap first go. Yeah, I think we're going to chop sideways. I would like, again, to see it flush here before it can finally go up. However, the more it ranges, the better I'll feel about when it finally does flush for it to come back up. I think a big play needs time to mature. That's what I think needs to happen. ES, higher time frame, same thing. We're on this VPOC right here on the 240-minute chart. I still think we're going to go down. Let's go to the fucking appropriate chart.
ES10 range up here in the gap. I don't think this gap can go. It finally mid-rolled. I did mention that in last night's prep. Need to see the mid-roll. We get in the mid-roll. Good. Now, there's this 17-hour profile here that I think could shit itself. Here's the composite. It almost looks like a perfect curve, but it's flanked by a bunch of low nodes. You know, sure, we could put some red lines in there. I'm not going to quite do that since this is the gap. I want to see that 17-hour profile get flushed. I really think it could happen. This has gone sideways forever. We gotta, again, could be pretty sideways here. Really need to see what's happening in the session to get a determination of that. I just not quite sure. Overall, I think there needs to be a bigger flush down before we finally get through the yellow box.
Okay, back to this. Now that you've seen that. All right. So, and remember, anything can happen when you're calling out shit markets. However, there's high probability ideas, so I'm going to zoom out a little bit so we can just see as this thing jumps down. So I'm going to show you a little magic trick, okay? You guys want to see a magic trick? Oh, look, the market is fucking free falling. Okay, where could it potentially get stuck? Well, I don't know, maybe a fucking high-noted area. And since you're just looking at an RTH session and not a 3-year profile, you wouldn't know that this exists right here and that the market could potentially get stuck right the fuck here. Okay, so look at that. It comes down, and then this price action, this little profile starts to match the 3-year profile. Holy shit. Wow, would you fucking look at that? Now it's completely matched, and it looks pretty fucking identical. Yes, it looks different, but as I oh, my fucking head's in the way. So as I stated, look how different that looks to this. Do you see how, like, this is more peaky in the middle, where this is kind of slanted? That just goes to show you that when you have 59 days worth of trading right here, it's not moving as much as it does in an RTH session, okay? So, wow, would you look at that? Now I can use a 3-year to kind of guesstimate how the price might get stuck or where it might hit locations where it might go fast and shit like that based off a 3-year profile. The 3-year profile is like the road under your fucking car, okay? It is rigid, it is solid. It is the difference between driving on a fucking concrete road versus driving on a rickety fucking wooden bridge across a fucking river in some fucking country in South America you've never heard of, okay? And God knows if that bridge is gonna fucking collapse or not, right? That is the difference between the 3-year and the RTH session, okay? Would you fucking look at that? And look at that low node is in that low node pocket. Now, let's go ahead and talk about my favorite fucking setup, the oldest trick in the book. It's called the gap jump. Not to be confused with overnight gaps that most future traders attempt to trade. I don't fucking trade those things because I think overnight volume matters. I think overnight price action matters. And those of you who are ignoring the overnight auctions and the overnight price action, well, I just don't think that's really smart. You shouldn't do that because that matters too, and that does influence what's going to happen in the RTH session. So here we go. Let's continue. All right, let's get rid of all this crap, okay? Let's get rid of all of this crap, and let me show you a little fucking Fat Cat's oldest playbook trick in the fucking book, and you guys probably have seen me talk about this a bunch of times. You guys have probably seen the yellow box, the infamous yellow box, this. Woo! That is the gap. So what exactly is the gap? The gap will be low-noted sections on the 3-year profile only. So here's the thing with the gap. So do you notice how wide my 3-year profile is? It's like, you know, that fucking wide. Look how wide it is. Why is my 3-year profile so wide? Because it makes the volume bars taller. And when the volume bars are taller, it over-exaggerates the difference between low nodes and high nodes. If the profile wasn't tall enough, these low-noted sections would be harder to see. So stretching that 3-year profile across the screen is very helpful. And by the way, guys, if you like this video and you don't want to buy the membership and you want to thank me, you can go to the coffee, link in the description, and donate $3. And, you know, I'd appreciate that. So if you just want to. But anyways, continuing on, look at how, you want to stretch the 3-year profile. And you want to look for these more squared cutouts. That's right. Fat Cat is giving you all the secrets. But just keep in mind that just because I can trade these successfully doesn't mean you can. But here's the thing. I've been looking at these and trading gaps for years and years. So I can't put that experience and all that sample size into your brain. So just, you need to keep that in mind. Okay, so this is not a gap, but this little section is a gap. In fact, there's a very tall fucking gap. Let's actually shrink this profile. And you probably heard me talk about it in the that prep sample clip. There's a giant gap up here, okay? So I could do, look how it's kind of like a squared cutout. Now what I would do is probably draw it from here to here. Or better yet, what I could do is draw smaller gaps like there's one here. Or I could do a smaller one right here as well. As you can see, there's like a really, really small one in this section. Okay, so here's the thing about the gap play. Dr. Brett Steenbarger used to have an active fucking YouTube channel, and I watched every fucking video the day it came out. And if you don't know who Dr. Brett Steenbarger is, just look him up. He's one of the greatest trading psychologists out there. He had announced on his YouTube channel that if you can share with him Edge or some sort of setup, you would get invited to a private meetup. And then if it was good enough, you would be in a private group, which I submitted this gap setup and did a huge write-up on it and how it can give you edge into other setups, how it can give you almost instantaneous momentum into other setups. That's right, with the gap play, you get almost instantaneous momentum. There's nuances. All right, let's continue. So the gap, all right, the gaps are going to be low nodes on a 3-year profile. Since we have over 59 trading sessions in this region roughly, well, what we know is a fact is A, the highest nodes are the most popular nodes in a 59-day period. And we also know that by watching the RTH session from earlier in this video, price action does like those high nodes and will tend to be attracted to those high nodes, even though it's old volume from days or years ago, okay? It doesn't matter, because what you got to understand is there are higher time frame participants doing things for different reasons. It's no different than the 200-day moving average on a daily chart or support and resistance on a daily chart. If that support and resistance is super duper old, and here's a prime fucking example. Here's the ES daily chart. Right in this fucking area, we have support and resistance. Right in this area, you can see from here over, it held quite a bit, okay? How many fucking days is that? Let's drag this over. Wow, that's 256 days. Between that support area and the next pivot was about, I can't even, 93 fucking days. We rolled roughly the same area 93 fucking days later. Okay, what about between this pivot and that pivot right there? All right, let's go ahead and go here. Oh, wow, that was 51 fucking days between tests, and it held roughly the same area. And notice where it has held, it has moved the market down hundreds of fucking points. In this area, we have gone down hundreds of points each time. So here's the thing. The market does have memory, and it does care about old shit. And support and resistance is the oldest fucking trick in the fucking book, and it works on daily charts, And the reason all this shit works is because we think it works. And as a collective, since we all think it works, it fucking works. There you fucking go. So, same thing is happening on the 3-year profile. All right? So what we know is and I'm telling you from looking at it since the mid-year of 2019 that the price likes this shit. It just does. And I made edge out of it, okay? So here's the thing. Again, it's 59 trading sessions, so the highest nodes are popular. So therefore it's popular. It's clearly popular. B, we saw it on the RTH session be attracted to those high nodes when we put in new lows. So as I was dragging that profile and we put in new lows, you saw how the price started to get attracted to those 3-year higher noded sections. Okay, and what also we know that is a fact, okay, is these low nodes are unpopular prices. It's a fact. Less contracts traded there, therefore it's less fucking popular, right? It's like a popularity contest. Something I never won in fucking high school, okay? The less contracts that trade somewhere, the less popular it is. The more they trade, the more popular it is. That's just how it is, okay? So these 59 trading sessions, these low nodes are a big fucking deal. They are incredibly unpopular. So, what I like is these square cutouts. Because when we probe on the edges, okay, and the reason I like square cutouts, not tapered, because you get almost this instantaneous momentum. Notice how you have these low nodes right here. Look how prominent this is. Okay, so let's zoom in. Well, maybe we can't. So the difference between this node and this node here is substantial. Here to here. So those are high volume edges. Even there's a gap here, okay? Let's just draw the gap so you guys can have another fucking case study. All right. So these low node valleys are being flanked by aggressive high nodes, okay? So whatever is happening is those high nodes are tremendously more popular than the node one tick below it. So this is why I want to see a square cutout. Because if it's a gradual decrease and it's not like a hard cutout, a hard chunk, a hard square missing from the profile, you don't tend to get as good price action. It tends to kind of like chop its way down. Whereas if it's a hard edge, I want to play that hard edge to the tick. And typically, since those are there's a huge cluster of low nodes, the price will almost always cruise right through it. And this is where it becomes very nuanced. So, the smaller the gap, the less testing it needs on the edge. The wider the gap, the more points, the more ticks, the more it's going to be a pain in the ass for the price to actually get all the way through. So therefore, there's got to be more testing. Okay? Just like this giant fucking gap way up here, which will definitely be easier to see on the fucking 10-minute chart. So let's go ahead and just look at it on the 10-minute chart. So I'm going to just slap this bad boy down like so. Okay, there is a giant gap up here worth 1 million fucking points. Okay, I over-exaggerate. It's not worth 1 million points. It's worth 133 ticks. 133 ticks, baby. That's right. It's worth 130 fucking 3 ticks. So, that's a big-ass fucking gap. Okay? You don't just go through a gap this size. Now, what I do like to see is much like a point of control that I talk about in this fucking video that I swear to fuck some of you have not gone and watched yet, which you should do immediately after this to tie it all in together. Okay? And those of you that think you can learn how to trade off of a 5-minute video, are you fucking high? You can't. All right. Anyways, let's continue. So, I talk about mid-pivots all the time. It applies to gaps. Ooh, baby. And we mid-pivoted up on this gap, literally right on the midpoint. Let me measure from the edge to the edge with my modified Fibonacci tool, and it rotated right in the middle. Does it always do that? No. Does it always do it that clean? No. However, I look for that, not to trade, but for context. That's right. Understanding price action that I don't want to trade is context. I actually have a video on that as well. Maybe you should go watch it if you don't know what context is. Okay, and we use context to build a narrative to make trading decisions, okay? Reading the price action and reading where these mid pivots give me an idea. Go watch this A+ video where I talk about a trade that had 2 midpoint pivots on it, which made the expected value, which I have a video on that as well, you should go watch, go way through the roof. Therefore, I'm going to trade the video. Are you seeing how Fat Cat's channel is all just being tied together and you can't learn it in one video? I love the fucking people that tell me, hey, Fat Cat, your videos are too fucking long and you don't get to the point. The point is the whole fucking video. The point is to pay attention to every little thing I say and put it together. Because if you think you can learn trading in a 5 fucking minute video, you fucking can't, and I think you're high. Okay, I think you're really delirious about how you fucking do this job. All right, let's continue. So this fucking gap had been tested 1, 2, 3, 4, 5, 6, 7, 8, 9 fucking times. Okay, so this gap had been tested 9 times. 9, 9, 9, 9. So for those of you who are part of prep, you will notice this. I will EV count it 9, and then I will give it a, well, I will give it a plus rating, and then I will put in mid-roll and ACC for acceptance, because here's the deal. And it mid-rolled this motherfucker 3 times. So that makes it even fucking better. Okay. Now, I don't know when we're going to come back up here. It could be months, or it may not. However, we came up, mid-tested, pulled all the way to the edge, the gap edge, by the way, ironically, hit the middle of it again. So that's 2 mid-test, and then hit roughly near the middle again. Things don't need to be exact. I'm going to give it a 3-time count. So by just looking at this note, which I have a really good video, which ties all of this shit together, and it shows you how I calculate these things from scratch. You should probably go watch that too. Seeing this, and seeing how the market is swinging way down here, really far, that's going to give it a lot of momentum that when it does eventually return up here, there's a very high probability we go all the way across. And I'm going to take that fucking trade. However, I know since this is 133 fucking ticks wide, I really don't think it's going to go across the first time. And I talk about it in fucking prep, which you guys saw. All right. Again, nuances. So let's continue. Every piece of edge out there is going to have nuance, and just because I can make it work and make money off of it doesn't mean you can't, because you need experience, and this is why people system jump and shit. Guys, you need to learn how to do this, get the experience, see hundreds if not thousands of these things to really get the hang of it, okay? And it goes to what I've said before. You can hand another trader edge on a silver platter, and it doesn't mean they can get it to work. You know why? Do you know why? Do you know why? Because this is a fucking skill-based job. This is the equivalent of being an athlete. And those of you who came here to get rich quick, well, you fucking picked the worst fucking scheme to do it in. Because it ain't gonna happen. This shit takes years. All right, now that I've said that, and those of you who are still serious and love trading for the... Look, you gotta love trading to love trading, just to love trading, and then you get paid. So those of you who have made it this far, you're a real G, you're a real trader, and you're passionate about this. This is who I talk to. So let's continue to do this shit. Okay, so we have a smaller gap here. Well, you know what? What is this gap? Has this gap ever been tested at any point in its fucking past? Well, I'm gonna go way the fuck back here, and I'm gonna redraw the gap because I really don't feel like stretching it the fuck over. Okay, so there's a gap here. This is, it's got these little things in the middle. You know, that's not, I mean, this could have happened recently. However, it's like, you know. All right, look at the gap over here. Well, would you look at that? Would you fucking look at it? Would you look at it? Look at it! Notice how it tests here, and then it does a mid-pivot. Holy shit, did it just fucking mid-pivot on this? I literally just pulling this sample out of my ass. And then it comes in and then it goes all the way through. All right. Instantaneous momentum. This would be an EV something. I don't know. We're not going to go any further back on this specific gap. You know what? Fuck it. We're going to go back on this fucking gap. You know what? We're not going to go back on this gap. So anyways, it jumps through. Then it comes back in. This would be an EV1 mid pivot from the... Because here's the thing. If it jumps, it can jump again. And typically, they tend to jump a lot more in higher volatility environment. I just noticed that. Like... They tend to jump. In lower volatility, they kind of need to test the edges a little bit more and all that shit. I mean, high volatility is literally the most beautiful thing there is known to man, other than nice-looking curves. So, just saying, that's another nuance as well. They tend to jump without testing as much. And here's the deal. The smaller the gap, the less testing it needs, the easier it's going to jump. And the larger the gap, the more points it's worth, the more drama it's going to have. And this is a series of low nodes built off 59 fucking trading sessions. So therefore, it's incredibly unpopular in this area. So they tend to just like, it just momentumly shoots across. So we get a fucking mid pivot here. And guys, this is the one edge. Those of you who do the prep series, which is not even the prep series anymore. It's the fucking... Like, you're getting trade narrations on it. Just learn this setup and get good at it. And then start to use other shit and start to overlay the other teachings I have. You don't really need to take everything I'm sharing at the same time. It's good to hear because over time it's just reprogramming your subconscious mind, because when you watch hours of my footage every fucking day, it's just like beating shit in your head over and over and over, right? It's like making like a swordsmith, right? How many times did they fucking fold the metal on a fucking katana? You know, thousands of times. And it makes it harder, sharper, and it's less it's more resistant to breaking. So therefore, you just need to have this shit beat into your head month after month, and then it starts to click. And even though it's like drinking from a fire hydrant, just keep putting your fucking head in it. You know, I know it hurts, but just keep doing it, and over time, things will start to unlock. That's just, you got to take it all on. You got to take it all at once, baby. Put it all in there at once. All right, anyways, so we got an EV1 right here. So let's draw this yellow magical light right here. This is called by yellow magical light. I said let's draw, sometimes I got to yell at Sierra because it's very disobedient. What I'm going to do is lock... What I'm going to do is lock this drawing. So we have an EV1 mid-roll. It almost made it to target. I do have a tag called AT for almost target. So EV1 mid-roll, that's what it looks like. All right, cool. So here's, it kind of comes out test again. You know, it just really is sitting on top of this that I think I'm going to give it an EV1 plus rating just to make it better. So EV1 plus, all right, because it really does test the edge, but it doesn't really pull back far enough. You know what? Let's give it about an EV2 rating. You kind of need to be loose with these things, and I talk about EV ratings in one of the other fucking videos I mentioned. You should watch all of them. Anyways, as we come way the fuck up. So let's go back into the future, shall we? All right, guys, so we're back in the fucking future. This is today. And we test it, and then we mid-roll it yet again. So now it's an EV2, and then we're going to modify the fucking text, and it's going to be a mid-roll times 2. So this is how I calculate if a trade has higher risk to reward or better expected value of working. Here's the thing, and Lance Brightstein talks about this. A trade can have shitty risk to reward. However, if it has extraordinarily high expected value with shitty risk to reward, it's still a good fucking trade. All right, so risk to reward is kind of overrated, but it's not. So just keep that in mind. Don't you like how I contradicted myself by saying that? So let's continue to look at this bad boy. Holy shit. Now it's ranging above it. Remember what that looked like on the profile? Well, now it tests it 1, 2, 3, 4 fucking times. All right, so here comes another fucking nuance that I'm about to just shove into your fucking subconscious mind. After I fucking amp up my EV rating here. Okay, so it tests it 1, 2, 3, 4 fucking times, right? So that means the EV rating goes to 6. and it has 2 mid rolls. Holy shit. There's a high potential, there's a high probability of this actually just ripping through. Oh, wow, it fucking did it too. Holy shit. I didn't cherry pick this. This just happens to be what happened fucking today. And guess what? You get to see a fucking trade example of me trading a different gap from today. Which one it is, I don't remember. But you get to fucking see it. So, look how it just goes across. Woo! Now, here's one of the nuances. When it ranges on top of the motherfucker, it's one thing to try to get short on it. However, when it really starts to range on top of it, be fucking careful. Okay? Those of you who've watched me trade, you'll probably notice that, like, I fight like hell to get into certain trades. Because at the end of it, you know, it could be a high expected value trade and it just ain't fucking working. And then all of a sudden I get it to work. So trade management and the ability to fight well and just manage around it like a fucking real boss is key to actually getting this shit to work. And here's something. Everything you work towards in trading, whether it's psychology, setups with edge, learning how to manage your stops, your take profits, learning how to scale in and out, all that shit, everything you do in trading comes down to trade management. And how well you're moving your stops and getting in and out of trades and moving your targets and just making adjustments on the fly and calculating shifting expected value while in a trade. All of that skill set comes down to trade management because you're not making or losing money until the moment you put a trade on. And the skill set of actually managing a trade, psychologically, everything you work towards comes down to that. I need to do a separate video on this. But that is the hardest thing you can do in trading, and that's what makes you good, okay? And everything you're working towards is to be a good trade manager. So when it comes to getting into these trades, you're going to get fucked up on these gap jumps. That's why it's important to understand, A, the nuance, and B, how to be a good trade manager. And if you join the coffee series, you can hear my thinking and see how I'm managing trades on the fly and getting in and out, why I took a break even, why I'm letting a trade breathe, why I'm not letting a trade breathe. There's several hours of these episodes. I don't know how many there are, but there's several hours of these episodes. So the prep series is no longer just a prep series. It's also trade narration videos where you can see the trades being executed on the DOM as well. So it's really awesome. It's a really badass little subscription service where you just get more, you know. So here's the thing. We're ranging on top of it. When you're ranging on a gap, it's going to make the expected value go up a lot higher. Don't just trade it. This is where other little nuanced skill sets come in play. And I could walk you through a hypothetical situation on this. However, this fucking, you know what? We're going to fucking do it. Okay, so here's the fucking, here's the profile, you know, going over time. So we know there's a profile here. All right, let's go ahead and like just sort of zoom in, and we're going to do sort of a hypothetical walkthrough on this shit where we use like little techniques and things from other sessions to take this trade. And by the way, since this trade is an EV6 mid-roll time 3 fucking trade, it makes a risk reward better on it. And it makes it to where when it finally comes out, there's a high chance that it's going to go past the other edge. Typically on these gaps, you want to scale or get out at the halfway mark. If it's a tremendously large gap, you want to scale at the midpoint almost always, okay? So let's go ahead and just do a hypothetical walkthrough. So here's the price coming down into this point. We're going to look at the RTH session as we go from right to left, okay? So this is just from the high into this newer area. I'm not using the full RTH session here. So as we come down, we can see there's a we can clearly see there's a range being built, and it has not touched the edge of the gap. Therefore, if it's not at the edge of the gap, I don't want to trade it. Like these trades, I want to take as close to the tick as possible, okay? So as it comes down, it's, okay, there's a bell curve here, there's a range. So if it's coming down here, there's a good chance it's just not going to go through because I've been fucked enough to trade these and try to get them to go through when there's clearly a range above me to go, oh, I know better than that. You won't fool me this time. All right. And here's the thing. Getting absolutely royally fucked by the markets over and over and over and over is a good thing, because that's how you learn what not to do. And let me tell you, my butthole is so huge and loose right now because of the years of getting fucked by this market that now I'm a lot wiser, and now I know it's little dirty tricks, okay? So, and now, guys, that was a figure of speech. My butthole is tight as shit that when I take a dump, it comes out the size of fucking angel hair pasta, all right? So, too much information. Okay. Anyways, let's continue to do this. So, as we are ranging, we've not hit this. So, as we come down to this bar right here, it's like, well, you know, there's a good chance it ain't gonna fucking go through. Also, I keep saying this in all the other videos. What are the correlated markets doing? Which is another video that I've not really created that you should know about. I do believe I talk about it in this video, which you should probably go watch. Anyways, let's continue. So, oh, we bounced it. All right, well, fuck. You know, we come up to the midpoint. We mid-pivot. Oh, look at that. Another fucking mid-pivot. All right, cool. So, we mid-pivot that son of a bitch. Let's continue to drag this out. I really want to wait, and I'm looking for very micro nuanced things. I'm looking for these things called flush fucks. That's what I'm going to coin it at this point. And when I see a flush fuck, I'll show you exactly what that is. That is another trick in the book to get other setups to work. Okay, as you can see, it's a bag of tricks, and the way you put them all together is how you get a trade to work. Anyways, we come up. I'm not seeing any fucking flush fucks. I am not seeing one flush fuck. All right, we fucking hit it again down here. This goes up to an EV whatever. Then we come down and test it pretty close again. The EV count goes up. Holy shit, we come here again. There's a difference, though. The price action is quite different. Notice how the price action comes up. Wait a second. Is this the trade that I actually fucking took in today's example, but I didn't hold it all the way through? Oh, Jesus. It might be. Anyways, I just had a fucking epiphany. All right, guys. I think I was looking at just this smaller gap here. Anyway, so whatever is in the trade example looks very familiar to this. So notice the price action comes up, and now it's like definitely getting stuck under value area low of a very, very perfect looking bell curve with very perfect price action. And in this video, that's a Hollywood fucking couple, okay? The better looking curve, the better the price action. When you slap them together, that makes things a lot fucking better. And holy shit, it looks so good. This is, I want to have this thing's child too. Just shove it in me. All right, so here we go. Now we're getting stuck under here. So that's a contextual shift. All right. Actually, I'm pretty fucking confident I fucking took this fucking trade. And you're about to see me take this trade, but I guess I was blind and didn't see the gap all the way across. So anyways, it's getting stuck right here, and then there's this micro range here. There's a little tiny micro range right here, which actually, if I drew a bell curve, I guarantee it would look like a bell curve. Please look like a bell curve so I can look good on stream. Oh my god, it looks like a fucking bell curve. So let's delete that. See, you don't always have to draw a curve to know if it's a curve, especially if it's something worth only that many ticks. So now it's getting stuck under value area low. All right, so there's this micro range here, and it rips up, and then it immediately comes in. It makes almost like this V formation, and it's not chopping and getting stuck up here, because if it chopped and got stuck up here, well, then the expected value, well, that's me attempting to draw chopping price action, but now it just looks like shit. All right, anyways, you get the idea. It goes straight up, and then it comes into this micro range. That is a high probability, nuanced little fucking trigger to use to get into all sorts of setups, not just a gap, but in this example, a gap. This little flush fucks thing I'm showing you, which will probably be a video on a separate day at a separate time, is a little fucking trigger to get into shit using micro structure and micro price action. Also, NQ was doing some crazy shit as well, which also helped remember what are the other markets doing. Correlation is the sexiest thing that I've not made an exclusive video about, because the last time I made a video about it, I talked shit about it, but now I learned some cool secrets about it, which aren't really secrets. So let's continue, and I talk about it in this fucking video. There's an area in that video called correlations. Go watch that if you want the fucking summary. Go to the chapter section. Anyways, let's continue going. So, then we just go through. I should have fucking held that trade, but I didn't realize how big the gap was because I didn't draw the full extent of the gap and I didn't include it. I just kind of didn't realize. Here's what I was trading. I traded this micro gap. Just didn't see it. Okay, so it was this one right here. This is what I traded. However, I think, we'll see. However, it was super high probability. And then there was a bigger gap and it flushed it. Whoops, didn't realize it. Because I didn't have anything drawn there prior, and I should have. And then I would have seen it. And then I would have made more money on it, but I didn't. So that's the nuance of trading any level, really. It doesn't matter what it is. If it's ranging against a level you want to trade, well, then it's not gonna go through very cleanly. You need to wait for it to come out of that range or attempt to catch it on the far side and use the magnetic properties of the middle of the range, the middle of the profile, the middle of the high node to suck the trade back in up here and get it to slap out over here. Okay, remember I said there was a good low node up here that was matching the RTH session earlier in the video? Holy shit, you could have fucking used that to get it to go through that giant gap had I fucking known. But I didn't because I didn't draw it, so I missed it. So those are the nuances of the gap. Oh my God, there's another one down here. It kind of bounces it, and then look, it just immediately flushes it. And again, it flushes right through it on the up fucking side. Sometimes it'll just flush it. Sometimes it doesn't even need to test it. Well, here you go, guys. That is the gap trade in a nutshell. So let's go ahead and take a look at actual trade from today.
We just got a mid-roll, so I'm going to put this up like this. Now we're up $105 fucking dollars, okay? Excuse me. Could I have probably held that? Maybe, yeah, but here's a gap. Here's a prime example of a micro gap. Can maybe attempt to re-engage, let it pull back to 75 evens, and in it now, this micro gap right here. See this yellow micro gap? This should jump. It mid-rolled. Probably not the most ideal situation I'm in. Well, it's actually decent because you got the mid-roll on the gap, and then we're like really embedding in these lows and shit. There's a high probability that this actually will flush 73.50. I think I got into this slightly too early. Well, it's a pullback on a gap as it attempted. It's actually pretty good. So we're not looking to be greedy on this by any fucking stretch of the imagination. I'm just looking for 73.50s. Which I will take damn near all of it off there. So you guys know. We're sitting in it now. Looking to get most of it there. And then we're going to just leave. This is a high probability gap. It's such a small gap worth what? Not quite 2 points. That there's a good chance that this is going to set up and go. And then it should just flush quick, which, you know. So watch this yellow box. It should flush fairly quickly. There we go. We're going to leave 2 on. just chilling here. So we are in this gap. Problem is Russell's making a breakout for the higher a move up. Another double tap. So we are ranging above this gap, which changes the sentiment on it quite a bit. Again, bigger picture, we are sort of embedded on the lower end here. Such a small gap, it should flush. Could. We don't know for a fact, just need some patience. It's embedding the edge of it. And then any damn day now, because I would really like to pick up whatever this is, which should put me up. I should be up about a K once this hits. It's burrowing in, which is great. Problem is, if you look at the chart, though, it is kind of the bottom of a range. So just patience on it. The oldest playbook in the playbook. We got this bullshit at 72. Could it hit it there? Yeah, but I'm just trying to play this fucking gap. Any fucking day now. Just come on, give me a little flusheroo. A little flush fuck, please. What a tease. There, NQ just dumps so fucking hard. There we go. Now we're going to hold just our 2 lots, which are bonuses to the lows. If not, we're going to just get out of the fucking thing. Now we are getting bottom ticks across all markets, which is not good. But as you can see, the yellow box crossed and is bouncing, so I don't want to overextend my welcome because there's no higher pitcher setup. However, I think there could be low of day, so we're going to hold this fucking 2 lot all the way down there. And remember what I said in this footage? What did I say when I took that loss? I'm like, no big fucking deal. Right? No fucking big deal. Who gives a shit? Yeah, drop in, bitch. Come on. Come on. Gonna take a 1 out right there. What a tease. Oh! So, since it's not filling that, we're gonna cancel. Yes, Womack, I know. You're annoying. So, what I've told you guys over and over, if it doesn't fill that, they're going to overshoot it. Watch. They're going to overshoot that 72.25. So now I can get an extra fucking little fucking hit. Yeah. NQ actually hitting some very interesting areas here. So they did overshoot it, but something happened to where it slipped hard. And because it's slipping hard like that, we're going to take it this one. Oh, actually, well, we accidentally got flat. I meant to hit the 1. Oh, well. Well, there you go, guys.
Alrighty, guys, if you want to catch that full fucking stream and see all of these trades being executed and watching me narrate all of the trades, join the membership in the coffee. It has to be the membership. Link in the description. I'm showing you a video right now of what you click on. Go there, and then you can catch this full narration episode, which I think is narration episode something or rather. I'll put it on the screen. However, some of the other episodes have 2 parts to them, so there's several hours of that type of video. And also, you can go watch one of these 3 videos, which are full-blown narration videos. So if you like these videos, well, hell, now they're in the membership section too. I just started doing it because I didn't put up prep shit for several days because of the 4th of July. And I'm like, you know what? Let's hook everybody up with some like bonus content. And now I like it too much that I want to just keep doing it. So there you go. So if you like that, check out some of these other videos. And I love you guys long time. You're the best fucking fan base. Love the fucking haters too. That's right, my asshole is a little tighter than yours, but not metaphorically. And I will see you in the next video.